There's never been a more powerful time in the history of history to make money off of knowledge.
That's for sure.
John Smith back in the day could have been the smartest man in the world, but he didn't have the resources to be able to
Yeah, we
do it.
have for sure.
Now with online resources, information at our fingertips, platforms like Robinhood being so user friendly that anyone could do it the second you turn 18, like the ability to make money is unprecedented. And so, like I was saying, we live in unprecedented times, and therefore it's an unprecedented time to get this bread.
Thank you for tuning into this episode of the Blackatalyst podcast. I'm Kyle,
Chris,
and you already know. Today we're gonna be talking about options. Options is a type of financial derivative that you could trade in the market. A lot of people like talking about stocks, this, that, and the third, but options is a great way to increase profitability. But before we get into that, in segment one of the podcast, we always like to focus on business news, what's happening in the world, because realistically, we love stock trading, but to trade stocks, you got to know what's happening in the world. What is going on in the economy? What are people on Wall Street and what are these guys talking about? So 2 topics we got today is Robinhood. They just increased their valuation, and TikTok is now paying creators. So first topic, Robinhood is increasing their valuation to $11.2 billion. How you feel about that, bro?
it makes sense. I mean, with the pandemic, a lot of people staying home, a lot of people watching videos like this one. There's a higher interest for trading or even just buying stock in general or just staying up to date on what's going on in the world. So their valuation increasing is a direct product of more people coming into the space. It makes sense that they increase their valuation. I think E-Trade, Charles Schwab's, all these other trading apps that have now allowed for free trading, like no fees, basically. It's really opened up the game to especially our generation. And I'm curious to see where Robinhood goes from here.
The one thing that I like about Robinhood is like that Robinhood understood one was the fact that going into trading before brokerage firms were having crazy commissions that you have to pay per trade if you're doing trades, right? So Robinhood was like, hey, we're not doing these commissions no more. Get that out of the way. But the reason I really, really love Robinhood is the educational aspect because so many people would trade if they knew how to. But for so long, it was just like, wall was like, yo, if you know kind of situation. If you don't know, don't even worry about it. You're good.
Definitely.
But now Robinhood has changed the game to say like, no, everybody needs to know how to do this because people are really amassing wealth at a rate that's ridiculous, and the average person doesn't know how to trade stocks. So it's like now we're gonna teach people not only are we gonna take away your commissions because you're really taxing for commissions, but we're also gonna teach people how to do that. And once I saw Robinhood, like even when you go to like options and it'll show you like, oh, if the stock is, they have like that little chart thing. If you trade a certain like options, it'll show you like this how much profit you'll make if it goes here, if it goes here, if it goes here. That's something that no other brokerage firm was doing at a very accessible rate without you having to pay an advisor to do. That's crazy.
Yeah, no, I've used a variety of trading platforms. I think I started with TD Ameritrade. I've touched E-Trade, Webull. Robinhood definitely has like the most friendly, user-friendly interface. It's definitely easy to read. For anyone trying to get into trading, like we've talked in past videos, Robinhood is definitely the first go-to to just put your foot in the water. But yeah, with respect to like those graphs that they have, it's even so descriptive or so clear to read for anyone who's trying to check it out. It's like the bar has the red in the bottom, green up top. They'll say the most you could lose is $20.
Yeah, that's fire too. The fact that it shows you your minimum loss. Like who's competing with that right now? Nobody, bro.
Especially not. So like E-Trade, for example, they're a really top brokerage firm that people use, but the problem with these other apps, when you go into them, you're overwhelmed with information. Have all these trading charts, like candles, like
with no
explanation whatsoever. And then the data that they give you, although it's very helpful, like especially an experienced investor, the way Robinhood has simplified it, I'm not surprised at all that they've boosted their valuation to 11.2.
And look at even like you talking about other brokerage platforms. They said Robinhood by far had the most brokerage accounts opens, which makes sense because like a lot of first social media was probably very beneficial for Robinhood also because most people were saying like, oh, simple, just open Robinhood, you're good, right? And also as soon as the stock market was going down, every investor knew, like, yo, we're about to make a lot of money right now. Because as soon as everything started going down, everything went back up literally a month later. And people are seeing, like, 38K returns. Like, people who just invested for the first time, like, just ridiculous returns. Which, to be honest, like, even though a lot of people are seeing that, under normal market conditions, the average person is not going to see that. Unless you're fully locked in the stocks, you're doing this every day. Like, at that time, you could have probably invested in anything, and it would have had a decent return because the stock market was so down. There's so much cash got pushed into the economy that it went so high. But
another thing Robin was doing, I don't know if you heard about the Robinhood debit card.
Oh yeah,
Bro.
I've heard a little bit about it, but not too much.
So let's say you get into trading and you're doing all right. Like, let's say you made $200 today. That's pretty good especially for a new investor. Now you can have a Robinhood debit card. That money's instantly available for you to just use, swipe. You want to go get dinner with you and your girl, for example.
Facts.
You made $200 today off of you using your knowledge. You reading something in the news and you're like, let me make a trade. Now you have extra funds available at the ready just because you made a trade. Something so simple like that could translate into so many other parts of your life that it's just, I haven't seen any other trading platforms do that. So I really like the debit card idea.
In terms of, like, it makes so much sense. I wouldn't be surprised if, like, a Robinhood in the future, they start to, like, bring on, like, a more educational, like, course aspect or something like that. Because I feel like just the way that the platform is set up right now is, like, they're heavy focus on education because they know that their main audience is retail investors, like, very new retail investors. So people who are coming in with less than $1,000, but they're interested in knowing what's going on. So Robinhood's like, we're going to fully optimize our platform. So if they were to transition into more of, like, an educational aspect, like, listen, we're going to have Robinhood. Like, they have Robinhood Snacks, which is their newsletter. Yeah. I tell everybody to sign up for it if you have the opportunity to. It's a great newsletter that's going to give you a great financial overview about certain things. But it's just a great picture. And if they had, like, instructors come in, like, oh, we're going to do a course today specifically on this kind of options or that, I think it'd be a good move for Robinhood.
Nah, definitely. Speaking of money, TikTok's paying creators now.
Oh, man, yeah.
So basically, if you have, I think there's some minimum requirements for it, like maybe 10K views, 10K followers, something else. But per 1,000 views, you can make 2 to 3 cents on the dollar, which kind of sounds like a lot for little, a lot of views to have for so little. But then you think of these, like, top TikTok stars like Addison Rae or like Dixie, something like that. Who
definitely top? They're definitely his name probably top 5.
Yeah,
for sure.
They do the quick WAP dance and then they pocket a quick $2,000 for essentially a 10-second video. So obviously this is the top of the top of TikTok, but, like,
it puts it in perspective though.
It definitely puts in perspective what TikTok is doing. The doors they're opening with giving, essentially paying back the creators, the people who make and build and keep the app running, and allowing them to make money as a result.
I like it, but one thing I feel like is going to hurt Robinhood is the average person. Not Robinhood, but TikTok, my fault. One thing that's going to hurt TikTok is the fact that most people are going to compare the CPM to, like, YouTube. Because they're going to say, if I'm creating videos, why would I only want 2 cents if YouTube is paying, like, I think the average CPM on YouTube might be $4 to $8, something like that. For average CPM for YouTube, why would I get the cents? But I remember we were speaking earlier before we came on this. You said it's 10 seconds. You don't got to edit a video. You don't got to do half the stuff you got to do for YouTube. It's 10 seconds.
And on top of that, like, I'm not going to say everybody makes TikToks, but there's a vast amount of people who are just making TikToks for no reason versus compared to the number of people who are making YouTube videos. So, like, obviously there's a large amount of people who make YouTube videos. But, like, the ease to just post a TikTok video, maybe it blows up, maybe it doesn't, which also, like, comments on the algorithm they have, like, essentially anyone can blow up at any time.
That's a fact.
It allows so much more of a easier way to reach those dollars or hit those CPM targets you may have that YouTube doesn't provide for its creators.
So therefore, the fact that you have basically, like, I'm not gonna say inorganic, but, like, easier growth, basically. YouTube will push it, but they're not gonna push it at a way that TikTok is gonna push it.
Exactly.
So the fact that you can amass 500K on TikTok as opposed to trying to get 500K subscribers on YouTube is substantially easier on TikTok. So therefore, they're not. It's like risk and reward if you really want to get into it. It's really lower risk, lower reward because you can grow faster.
In addition to, like, the amount of time you need to even make a video. So YouTube video, you got to record it. You got to know what you want to do before you even record it. Then once you do, edit it, put it up to YouTube, and then you're waiting days on end for views to start generating unless you already have, like, a subscriber base. versus TikTok, this could be your first video.
You get 1 million a day.
You can catch 1 million views for no reason, and then 1 million, you can do the math yourself. But at 2 to 3 cents per 1,000, like you're making a couple dollars for literally you sending
and
the
a meal probably like 200 off of that.
In the comfort of your home, doing the WAP.
Imagine making $200-300 in a second. Just like off of like, yo, today I'm just gonna take out my phone, just gonna record something. This is how I'm feeling today. I'm just feeling like I want to record this video. It gets 1 million views. You get $300. There's jobs that don't even pay $300 a day.
No,
you made it. You made it in literally. You had a concept. Your concept blew up in a way that no other platform, actually does not offer you, where you can literally reach people who you don't know. So that's actually tough.
Which brings up another question. Like, do you think we'll see other platforms going into this type of space of funding their creators in a way that better incentivizes them to create videos? Or like Instagram or Facebook, like obviously there's a lot of people who post on those platforms, but it's purely for the social aspect, versus TikTok, where it was just social. Now it's also allowing the creators to get some money back. Do you see that as an option for other platforms?
The thing is, I feel like based on like the principle of what the platforms meant, I wouldn't have ever seen a Facebook or a Instagram paying their creators. But at this point, it's most other social media platforms are going to be paying their creators. They're going to substantially lose out, because now people are incentivized to create the best content they possibly can. So there's no reason for me to post on Instagram. There's no reason for me to do all this other stuff. I'm going to spend most of my time on TikTok, most of my like energy towards TikTok. If I'm an Instagram creator and I'm posting videos that's getting 1 million views, that 1 million views is worth something on TikTok. It's worth 0 on Instagram. So yes, I might still post my little pictures of me going on a vacation. I might post my pictures of me taking a little trip, but I'm not going to care to say, oh, I'm going to think of an idea to post on Instagram. No, I'm going to think of my idea for TikTok. It might reach Instagram, but that's not my main goal, because I don't care. Instagram's not doing anything for me. It's all about value, everything in business. So
yeah, TikTok's really finesse too, because even there'll be a bunch of TikTok videos on Instagram. That's directly copied and pasted and posted on IG.
Hey, we about to start doing that too. So look at Blackatalyst TikTok. We about to start doing some stuff over there.
So like the funneling of advertisements from one platform to another, TikTok's definitely finesse space.
Nah, for sure. And with speed too, is I feel like, I mean, I don't know. I know TikTok was like previously another company I don't know too much about, but it became TikTok, and then it's like as soon as it started, it's like TikTok for business. Like if you have a company, you can advertise on TikTok, all this other stuff. You get paid now for the creators. My one thing though that I would criticize TikTokers about, I don't know how they're gonna make so much money.
Because it's gotta be data. It's gotta be straight.
That's what I'm thinking, because it can't be ads.
Because we already know about like the concerns about like TikTok collecting people's data. Like
it has to.
They gotta be straight selling that to other agencies, other companies that are interested in like what their consumers are, like who they're selling to, and like as that data becomes more valuable, I even see TikTok paying more for that data, because we already know TikTok's using our data. Like when you scroll and you see a video that you like, and the next video you like, that's a direct result of
what you like,
of them like better collecting like who you are and like what your interests are. So although now it's only 2 to 3 cents, like we might even see that continue to raise as like TikTok becomes better
optimizing their platform. But that's why I was really wondering the main time. I'm like, nobody, like if they're going like straight on like ads, nobody wants their feed to be like every 3 scrolls is an ad, or every 2 scrolls is an ad, because that's gonna saturate the platform really fast, and people are gonna say like, yo, I don't even want to watch this. Even like creators who get like a lot of brand deals, people are starting to say like, yo, this page is worn out. Like, you used to be nice, but every video is an ad, because like nobody wants to see ads all the time. People want to see content genuinely interact with people. So like if you're on the platform and you're saying, oh, I like this person, ad, oh my god, I like this person, ad, oh my god, you're gonna get tight.
Yeah.
But I just want to know, like, how much data do you think they could really get?
Well, so this reminds me of some app called HQ. Have you ever heard of that? It was like an app where it was like a game show app where you answer questions, but it'd be like 1 million people on. You answer questions, and whoever gets the most questions right, like, wins like a fat prize. Like maybe it's like 100,000.
Okay.
And an app like that, it brings the question: where are they getting this money? Just because someone's
how you get paid?
Just because someone's answering questions doesn't mean you suddenly have like a fund to like pay them. But it works because many people are coming online trying to win this prize, and as a result, their data is being collected. So then they have their own source of revenue coming straight from the data they collect from you. And as a result, they're able to give off this prize, but also continue to sell off your data because you want to win that money too. So when I think about TikTok, it's like, yeah, there's no obvious way that they're making money. The only thing I can think of is like you're using this app, they're 100% collecting your data. That's why like questions of them being banned has even like been brought up.
Right.
But like this is definitely the only way they're like generating revenue.
I feel like it's gonna be hard to sustain though over time.
You think? I don't know.
Like
Data is very valuable these days.
But the more people that become like educated on data, I feel like the government's gonna step in, which is something we've always been talking about on this podcast. Is like, yo, does the government have too much power? But I feel like the government is gonna do what the government likes to do and say, hey, you can't do that no more.
But check this out. So with the whole TikTok deal with Trump, he's been saying like not only does TikTok have to come to the U.S. and like the sale has to be done to a U.S. company, we want a percentage of the money.
No way.
Yo, swear to God, he was like in some press.
I didn't even read that.
In some press conference, he was like, yeah, on top of like the sale being made, we want a percentage of that paid to the U.S. government. So he's essentially saying he wants to take a cut in order to like backtrack a little bit. He's essentially saying on another level, for the data that is being collected, and this is obviously my opinion, but that's how I interpret it. For the data that's being collected, we're not going to have that over shores. We'll bring it to the U.S. But if we're going to do that, we're going to take a cut.
So
we're getting into some big stuff here.
So
right
they're
now.
getting. So okay. Hold on. I gotta understand this, guys. So basically, what we're interpreting, or you're interpreting, I want to understand, is that Trump is gonna collect money from the data, but that's when the data is sold. They're gonna get part of the revenue from that. Because technically, how would they make the money if they're selling it?
That's too direct, but yes, it's
okay.
Trump is gonna get money off of the sell of TikTok.
Oh,
TikTok makes money off of data.
Oh, I got you.
Inversely or conversely, Trump is gonna make money off the data sold on TikTok.
Okay, so technically, the U.S. government.
Yes.
So the U.S. government is gonna make money.
Yeah, not Trump directly or his like subsidiaries. Like
so, the U.S. government, right, is gonna make money off of the sale of TikTok. That's what I'm saying. But Joe, Trump be really working though. Cause if you think about it, like, listen, I ain't gonna say anything like in terms of support against the guy, but I'm saying like in terms of like a business move, it's like that's actually lethal in terms of it's a Chinese company that's selling to the U.S. But the U.S. government needs a piece of that bread. Like, what's up?
Like, whoa. You making money off our consumers?
Yeah.
Our people?
Come on. We need that because our people really need the bread. And think of it from like a political standpoint. I kind of understand it because like if you have a government and you want to protect your people are making money off your people. It's like, yo, you're making money off our people, but our people still need what they need. So we're going to tax you so we can give the services that our people need. So, I respect the move, though. That's tough.
And then just to hit on that last one, you said, like, eventually people are going to catch on and be like, yo, or, like, the government step in. Outside of that, so right now it's 2 to 3 cents. But as people become more, like, prone to the idea of, wait, is this worth it? Like, is what the data collecting their work, is that worth the money we're being paid? Which 2 to 3 cents per 1,000 views doesn't sound like it. And even once you bring up that question, once that becomes like in the head of everyone, goes right up. If it's that much more valuable and it's that much more at risk, then as a result, we're gonna make like they'll take care of the in between that, if that makes sense.
And I feel like once that happens, TikTok is probably gonna turn back around. Because TikTok really has probably the most leverage in the situation, granted everything. So TikTok is going to be like, listen, the people using this app are the people that you need. Because kids right now, they're going to become adults. They're going to be the people that are actually buying stuff. So you want to start imprinting now your brand in their head. So it's like, if you really want this app and you really want to do as much advertising you said you want to do, whatever we were saying we're going to do for you before, we need more. Because realistically, we want to create this as a platform that the most people could benefit. The advertiser could benefit. TikTok could benefit, the consumer could benefit. So it's like whatever we were telling you before, if it was $10 to reach X amount of people, it's now $25 because we want to be able to raise the price, maybe to 25 cents, 50 cents, maybe even $1 for whatever. I respect it though.
And throughout history, like our data has always come at a cost for like anything. So like maybe like during the Patriot Act, after like the 9/11 attacks, like we gave up our data a little bit for protection, for safety. When Facebook and Instagram, like you say, oh, you talk about there's a new pair of shoes and then it comes up on your feed, that comes at the cost of convenience. So, like, yeah, they're listening, but now I have better access to those shoes I actually wanted.
That's true.
All these things come at a cost. And now I think we might be moving to a space where data is becoming so valuable and consumers are becoming so, like, privy to what's going on. Like, they're actually going to get a check of what's going on.
True, and just to touch on that point too that you said about data becoming super important. I remember I was watching a video. I think might have been Gary Vee. Don't remember, but pretty sure it was Gary Vee. It was like, I don't understand why most people, like, I get why you wouldn't want your data out there, but it's more beneficial for you because even you said, like, they're gonna show you the shoes that you want because they're gonna optimize what you see to yourself, which to me is beneficial. Because then I don't have to go through the whole process of me trying to search the internet just to find a shirt that I like. They would already know. Yeah, you mean you bought this shirt, you like this video, you watch this video, you watch this and that. We think that you'll like this. So it's like, I win, the seller wins, everybody winning. What's the issue? But it might get crazy though at certain parts, so I'm not going to say that.
Yeah, there's the doomsday scenarios when, like, the data is used to, like against you and things of that nature. And, like, anyone could, like, envision those scenarios. And it makes sense to some degree. But as of now and up to this day, it's been, like, helpful. It's all, like, consumer-based. So, like, I don't really, like, give those point of views the time of day, even though it's to some degree valid because it's all based on principle.
Yeah, but I feel like that's how most people think about everything. Like, most people are just quick to take the pessimistic view,
and it makes sense,
as opposed to see how something could be beneficial. But I think we're gonna wrap it up right now, bro. Wrap up the first segment.
Yeah, we definitely covered all the important points of the business podcast.
Yeah, for sure. Like in the business segment, today Robinhood. Shout out to Robinhood. TikTok today, it was lit. Next segment, we get into options. This is for our traders out there. We promise we will touch on other stuff besides the stock market. We just love it so much. So stay tuned for segment 2, and we got
Basically, don't get your funny up, get your money up. We're going into options, right? We're going to explain what they are, why they're so popular, get into even more specifics, calls versus puts, and why, if you don't know about options, you should.
Like, the thing about options is, like, it's kind of complicated to explain, but basically why they're so popular is because you can make a lot more money trading them than as trading an actual stock. And we could try to explain, honestly, what an actual options contract is. And we'll probably give, like, a basic textbook answer. So in terms of, like, what it really is on face value is you're buying an options contract. You're not actually buying the stock. You're buying a contract to buy the stock at a specific price, which seems like confusing. It seems very confusing, honestly, but it's really not that confusing once you understand the basic principles. So example, like a call. Like, if you want to get into, like, what a call is.
Yeah, so, like, a call. Put in, like, the most simplest terms. I can give you an example. Like, let's say you want to buy a pair of sneakers. They cost, like, $100 right now, right? And instead of buying the actual pair of sneakers, you could buy an option contract. And don't get thrown off by that term. Basically, the option to the rights to sneakers. All that basically means is, like, without actually owning the sneakers, you have the ability to say, and in the example of a call, you have the ability to say, I think these shoes are going to continue to raise in price. So they cost $100 now. Maybe in, like, a couple weeks, maybe these are, like, vintage sneakers. There's only, like, 12 on the market. Basically, if you felt those sneakers are going to get up to, like, $200 one day, you would buy the option contract, which is the right to the sneaker. And without you even owning the sneakers, you would make money off of it going up. So I'm going to bring it back to the real world. For a stock, like, let's say Apple, you're like, oh, Apple's about to drop that new iPhone. I think their stock's going to go up. You're like, instead of buying actual Apple stock, I just want the option to buy it, which is an option contract. And if they do go up, you make money off of it going up because that contract you bought initially is now worth more.
For sure. And, like, just to hop on that example too, for example, like, if shoes are selling right now, you say it's selling, like, at 160, right? You could, and you think that the shoes might go up for, like, 300, right? You could buy an option contract for 200. So at that point, it's like you're buying at a decent price, and then once the shoes, like, the price of the shoe starts to, like, increase, you could sell it before it's 200, because most people are gonna start to see that contract you have is very valuable. So they're gonna say, like, oh, the price is going up. I also think it's gonna hit 300, and this person has a contract to buy it at 2. Because if the person buys the shoes at 2 and it hits 3, and they sell it, because basically, I had to go back. So basically, right, the contract is allowing them to buy it at 2, but you think it's going to hit 3. So if you have that contract, the person could technically make $100 if it hits 3, because they have the ability to buy the shoes at 200. So they're gonna say, "Oh, I want that contract." So they're gonna buy it off of you, and that's why the time value of options is so important. Because if it hasn't hit 200 yet, people are like, "Oh, it's probably gonna hit that price, which is gonna make it very valuable to me." They're gonna want that contract off of you, so they're gonna try to buy it from you.
Exactly. I mean, like, the whole point of trading, not even the point, obviously investing, like, make some money. But, like, the whole idea of trading, it's all based off of expectations. Like, what's going to happen in the future. Because they say no one can predict the future. And you can't. But if you could be correct on your prediction, then you get paid for that prediction. So, like, for my basketball fans out there, like, maybe you thought the Lakers were going to beat the Trailblazers. If these were stocks, and there's even people who like sports bet, but if these are stocks, if you were correct in saying, I think this is going to happen, you're getting paid for making a correct prediction before it happened. And so in the case of sneakers, you thought they were going to go up and they did, you get paid. Apple, you thought it was going to go up and it did, you get paid. And this goes into many different categories. Even like, let's say like Nike or whatever. You got Nike stock. And, like, some news just came out about, like, Nike using sweatshops in China. Like, some bad press, like,
For sure.
something bad related to the stock. You could even buy a put. So, I don't think it's going to go up now. I think it's going to go down. You could capitalize off of you being right on that decision. Once that news comes out, people are like, oh, like, Nike. Like, let me pull my investment away from Nike. Like, I don't want anything to do with a company that deals with sweatshops. Because you were right in that decision, the stock goes down and you make money as well. It's all like a game of expectations, and you essentially get paid for being correct on your prediction.
And I like that example in terms of like expectations because it's so true. Like if you break it down like simple, like if you expect the stock is gonna go up, you buy a call. You expect the stock is gonna go down, you buy a put. That's really making a more complicated situation simple, but it's just basically in all reality. If I think Apple's gonna go up, I'm gonna buy a call for it. If I think Apple's gonna go down, I'm gonna buy a put. Because that's just how the instruments work.
And like options at the end of the day, and once again we are simplifying to like a
very
big,
complex topic.
But at the end of the day, it's calls and puts, up and down. There are a bunch of advanced strategies that like if you stick with us, we'll go into in later videos. But like at the end of the day, it's up and down. And if you're able to just stay informed, up to date, and once you like start building your investment acumen, you'll be able to say like, oh, this is happening, like. I think that stock's probably going to go down. And then because you had that opinion, because you had this expectation that either met or didn't meet what the market thought, you could make a few dollars off it. So options at the end of the day is like calls and puts, up and down. And it's really not as complicated as like it seems at first hand, which is why we wanted to get into it today, just to kind of demystify and decomplex, like essentially simplify this like thing that's not really that hard, but you can profit off of.
And you just touched on a great point too in terms of like information and building your acumen. Like you gotta, like we always been saying the whole time, you gotta make sure that you're consuming the information that is valuable for what you want to do. If you really want to get into stocks, you can't just assume and say like, oh, I'm just feeling this way today. You gotta really understand what's the market doing, because there's a investment theory that the market price, like the people say the stock market is efficient, so the market price is gonna represent all the information out there.
Efficient market hypothesis.
Yeah, exactly. Efficient market hypothesis. The market is gonna exactly show what all the information out there is showing. So if you're reading everything, you're consuming all the information that's publicly available. You should be able to efficiently capitalize on the market based on that idea of the efficient market hypothesis.
Nah, I didn't even think about that theory in that way. So like, yeah, there is all this publicly available information, and essentially a stock price should reflect all that information, but it has like it needs time to reflect that. So Apple's at 50. Obviously, it's not. It's way higher than that. But Apple's at 50, and you've been staying up to date on their iPhone releases more so than the average person, more so than 70-year-old institutional investor
For sure.
who he might have bought an iPhone for his daughter, but he doesn't really know what's going on. There's like so many opportunities for you to like capitalize on those things. Even the case of like TikTok and Snapchat, which is very popular to like the younger audience. Like when TikTok does well, so like we talked about the creator fund earlier today. Snapchat doesn't do as well, or like when Snapchat does well, vice versa. There's so many like different relationships between like companies where if one does this then the other does that, and like as you continue to like trade, like you'll essentially be ready for those things. So even you could get a headline that says the stock market is down. You might not even have a clue what that means, but automatically you could know to get a call option on gold, because when the market goes down, gold typically goes up. It's like simple stuff like that that it might sound complicated right now, but the point I'm trying to make is that there's like patterns that occur as a result of certain things happening. And like if you're just there before it happens or as it happens, you can make a couple dollars.
And just even to touch on that gold topic, I know it's not the business news section, but I remember Warren Buffett literally just bet against the whole stock market by just having the idea of saying, like, I feel like people don't really understand, like, if you're receiving a stimulus, it's really nice for you, but the market implications of a stimulus is literally destructive. Because for a stimulus, they pump trillions of dollars into the market. So yes, right now the stocks are going to go up because they just pump so much money in there. But once people start to understand the dollar is going to get devalued, and eventually the stock market is going to represent that all this money got pushed in, you're going to need an alternative investment for that. So even though we're talking about options, I think it's a good time to touch on the fact that gold is a great hedge. So if you feel like inflation is about to kick ass, for lack of a better term, gold is a perfect investment to hedge that situation.
It's like as people become less confident in like the money supply or like the U.S. dollar, then they go back to like older forms of way to maintain or store currency, which is gold. It's like simple stuff like that we all even know, but like you probably in the past haven't been capitalizing on.
But like even like to get back to like the options in terms of like the benefits, like I feel like we did a good job of explaining, like you can make more money trading an option, but you got to put in more work, because in any situation, if there's any investment opportunity where you can make more money, you can lose more money. That's just how risk and reward works. If it's a possibility for you to make more, it's a possibility for you to lose more. In options, you can make more money, but you can also lose more money if you don't do it properly. There's a lot of different positions. You could buy a call, you could buy a put, you could sell a call, and you could sell a put. But once you're selling options, it gets really risky. That's why I only buy calls, because I'm kind of risk adverse a little bit. I'm not on the timing to be too risky. I don't know about what you do personally.
I mostly do calls, but there's once in a while when I see something like, oh, it's going down, I'm buying a put. But I'm like 90%
even
calls.
buying a put is not as risk adverse. It's not as like,
you're saying like with like strategies when you buy like call put.
No, I'm saying in terms of like if you're very risky, that's when you get into selling calls. Like selling a call and selling a put is very risky.
Yeah,
but it's definitely selling a call, because you could lose unlimited amount of money because the stock can always go up. And there's somebody who I was reading about who literally lost like hundreds of thousands of dollars on selling a call, for the main fact that, one, they didn't know that the risk was unlimited.
I know exactly what you're talking
and two,
about.
they bought a levered fund. A levered fund, which seems so attractive, and a lot of these investment gurus push levered funds. I'm not saying it's bad, but I'm saying the fund is levered. And if it's levered, if it's 2x positive, it is 2x negative. So they'll buy a levered fund, and they'll say, oh yeah, I think the stock is gonna go down, right? So they'll buy a 2x, they'll sell a 2x call, and the stock will appreciate. Yo, they'll buy a position. No, they'll sell a position saying that, oh, this position is gonna go down. Okay, when you sell a call, you're assuming that the position is gonna go down. You're gonna make money, but the stock goes up, and a stock could go up forever. It doesn't have to stop. It literally can go to the moon. It doesn't have to stop, and it's levered. So not only is it going up, it's going up at 2, 3, maybe even 10x what you thought it was going to do. So now you're losing that much more money because you thought that buying a levered position was better. It's not always better.
And don't worry if like some of those terms you might not understand. Like if you do, then like you're well on your way. But if not, keep watching these videos. Like we're going to keep going to depth on all of these like strategies, different ways to make money, and it'll make sense. But to just go into that, like, I think it's more of a mindset thing. So like you said, you need to be informed because there's a higher level of risk versus the reward. I think the same way, like, you say, like, oh, like, Kyrie's injured, like, the Nets aren't going to play as well today, or, like, for the Clippers, beast team, it's like, you know maybe, well, Kawhi's been playing. He doesn't get hurt because he's a robot, but, like, if you're like, Kawhi, if you're like, Kawhi's out today, that's their best player, they're probably not going to perform as well. That's literally the same exact thing as, like, some news coming out about a stock and be like, oh, this happened, then they probably won't perform as well. It's all a mindset. So like, we've been like, I don't want to say like, I mean, most people get their entertainment for sports. It makes sense. Like, it's very entertaining to watch, and so we're well informed of what's going on in the sports world. Like oh, Tom Brady leaves the Patriots, things like that. But if you just shift that mindset ever so slightly, and like a little bit more about what's going on financially, then you can make money as a result. So you shift like your mindset from entertainment to like current events about the world, you can make money as a result.
Yeah, and it just comes into like, I'm pretty sure if you even with the shoes or say with sports, you're probably very invested into that aspect because it's cool to you. But if you really want to get started into stocks, it gotta be cool to you. You gotta follow stock pages. You gotta start following publications that are pushing information that's gonna be beneficial to you wanting to make money in the stock market. I say it all the time. Start reading the Wall Street Journal. Start reading CNBC. Start reading MarketWatch. Start reading books that are gonna help you. I'm not saying you read books on shoe reselling. I'm not even sure if there's books on that. But the premise is just the fact that just get into it. We want to get money. We got you. We want to get money too. That's why we do what we do. And it's just trying to learn and understand. But hold on, I want to take this time because I never say it. Subscribe to the YouTube channel. Like the YouTube channel. I'm tired of y'all watching the video and not liking and subscribing. Like, what's good? Like, we just trying to put out information that we feel like is beneficial to people out there who's getting money and like to get money.
Nah, definitely. And like I said already, get your money up, not your funny up, right? You want to stay informed, be the smartest person in the room. Have that confidence that you know what you're talking about whenever you say anything.
For sure.
And then because you know what you're talking about, you making money too. There's never been a more powerful time in the history of history to make money off of knowledge. John Smith back in the day could have been the smartest man in the world, but he didn't have the resources to be able to do it.
Yeah, for sure.
Now with online resources, information at our fingertips, platforms like Robinhood being so user friendly that anyone could do it the second you turn 18, like the ability to make money is unprecedented. And so, like I was saying, we live in unprecedented times, and therefore it's an unprecedented time to get this bread.
Yeah, true. And one question I feel like most people ask all the time is like, how do you find a certain stock? How do you know what to do? And that's really, I feel like for the process is different for each person, so it's kind of hard to explain specifically to say like how to find a specific stock. But there's certain strategies that are universal and how to find it, and I feel like it just comes down to research, like you said the whole time. It just comes down to putting in that work, spending that time actually looking for a position, looking for why that position will work, and the more research you do, the better off you'll be. You agree?
Nah, definitely, yeah. There's a bunch of different strategies. I myself, just because I've like done it for about a year now, I feel like I've crafted my own strategy. But it's only been a year. Mm-hmm. Like, that might seem like a long time, but in the long run, like, a year is nothing compared to, like, the amount of time that so many people at these, like, big institutions have been trading on a daily basis. Like I was saying before, we live in a time where you could get into it right now today and in 3 months be at a completely different position than you are now. You could know so much more about the markets, how it works, that you're starting to craft your own strategy. For sure, and so, like, for me specifically, I'll look at, like, the amount of options volume, like specifically for options contract. First, I'll look at what's going on in the news. Maybe like this company has an earnings report tomorrow. Now I want to know more. I'm reading about what's going on. I'm like, Logitech has earnings tomorrow. Oh, now I'm using my own knowledge. I'm like, but everyone's been using Zoom. A lot more people have been buying cameras. Let me buy option contracts, see what's going on. And then it's sometimes it's that simple. Logitech killed their earnings. So like, everyone has their own strategy, but, like, it's only been a year for me, and I've already crafted what I believe is somewhat of a successful strategy. So, like, I know definitely anyone watching this can, too.
Yeah, and, it just really comes down to, like we said, just get into it. But I want to get into, like, on the stock trading, I know a lot of people, it was one question somebody had asked me. Dang, how did I forget the question? Oh, no.
What was it about?
But it was, like, in terms of stock trading, the question was like very specific in terms of, because they were basically telling me like a return somebody else got, and it was like,
how do you get that return? Or
it was along the lines of, is it possible? Because, dang,
you talking about 38K from.
No, it was somebody who made like a ridiculous amount of money off of, but it was like one of their friends. It's like, oh, this person made this amount of money in the stock market, and my premise off of that was, there's gonna be people. Oh, I remember what I was gonna say. There's gonna be people in the stock market who are going to make more money, and you have to realize that each person's process is different. Each person's learning is different. So if you're starting today and somebody is 2 years in, you can't expect to make that the same return they're gonna make, because you don't have that experience. So I feel like people just beat themselves up all the time in the stock market. Like, how is it that I'm making this amount of money, this person's making that? First one, and just overall, take stocks out the picture, and business in general, it's bad to have that mindset. Don't have a mindset of saying like, oh, this person is doing this, so why am I not doing that? Because your process is different. Just understand that that person has been spending 2 years doing it. You've only been spending 2 days. Like, just everybody's process is different. Just make sure you can optimize your process as best as possible by doing what you have to do. But never, please, especially with stocks, don't compare yourself to the next person. Just follow your one journey and understand Chris gets crazy returns. I don't get the returns he gets because he's a beast. But I don't ever say like, oh my God, why is Chris doing this and I'm not getting that? Because I understand that we're two different people. This guy's a beast. I'm still learning to a certain degree. So I got to be confident in myself and say like, listen, I'm going to just do what I have to do to optimize my own journey. And Chris is still going to keep getting his returns because he's like that.
And just to go off that though, while you do bring up many valid points, and that's true to any area of life, like you shouldn't play the comparative game.
For sure.
Competition is a great thing out in our atmosphere. You want to be competitive. You want to be maybe the best at whatever you're doing. But comparing and then consequently feeling down on yourself is never a winning strategy. I will say, though, that trading is the one unique thing that you can do in this world where time isn't linear. So, like, just because someone's been trading for 20 years doesn't always mean they're, like, the best. You could get into it and have trades that someone who's been doing it for basically the time frame. It's not a linear, this is how you will, like, how you will progress.
Correct, sure.
So, I mean, although this is how most things go, there is an opportunity for you to be like, oh, I think this is going to happen. Let me make a trade. Maybe you lose a couple times, but there's one day where, like, you weren't just right. Like, you were just way beyond the numbers. Like, the stock absolutely flies. Like, Kodak the other day absolutely skyrocketed. If you had a couple dollars...
That's a tough prediction if you made that.
That's a tough prediction. But if you were there, you would had enough wins to erase all your losses prior to. So, like, it's not exactly linear, but you do bring up a good point. You should never compare yourself to someone else who's honestly just trying to do the same thing you're doing, just slightly more ahead with respect to time.
Yeah. I mean, just to summarize, we kind of touched on a lot of things, but just if we were to put it into perspective, options trading is very difficult, but just understand, simple. If you think the stock is going up, you buy a call. You think the stock is going down, you buy a put. That's very simple. Start there. We're going to cover more advanced strategy in the future. And also, I want to take the time to touch on, don't worry, we got you. We're going to get back into the interview soon. With what's going on right now, it's been kind of a little difficult trying to finesse certain things. And it's a little bit more logistical things we got to do. But, we're very invested in the platform, very invested in spreading financial information because we love financial information. People out there love financial information too. So just stay in tune. We got the interviews coming. We got the heat coming. And just stay tapped in. Subscribe to the channel for sure.